Hello, everybody, and welcome to the Dorsey Wright video for Monday, December the 14th. I'm Jay Gragnani, and here joining me this week is Ian Saunders. And we're coming off of a week, and it was great to talk to so many of you last week. We held, for the first time, a virtual symposium that was about a half-day session that we hosted via Zoom. Phenomenal turnout. Appreciate everybody taking time out of their day to hear what we had to say and what we put together. For those of you who were not able to attend live, we did record the sessions. If there's information in there or you have any questions about that, please don't hesitate to reach out to us. We'll have some contact information for you here at the end of the call. But you know, as is often the case when we host our events, typically our live in-person events we have historically hosted in the fall. Here in Richmond, Virginia, we pushed that back a little bit and obviously did it virtual this year, given the state of the environment that we're all dealing in and living in. But it never fails that around those events, there is a fair amount of increase or spike in volatility, perhaps just given that the time of year often is in October or early November. However, Ian, this year, last week, when we go back and just kind of look at market returns, for the first week that I can remember in a while, the market returns were relatively muted across the board.
Yeah, absolutely, Jay. And in looking at the weekly performance overview that we typically do on this Monday update, seeing a kind of continuation of some of the similar themes that we've seen over the course of the past several weeks were again reflected there last week. With, I mean, one of the broader themes that we've kind of continued to touch on is the continued improvement from some of the laggard areas from a sector perspective, with energy once again being the top performance sector fund out of the Spider sector fund representatives that we are looking at here. Over the last 7 days, up a little bit over 1%. Following crude oil also showing improvement, further improvement as well. Also up over 1% there over the course of the past week. But then we see that iShares Russell 2000 ETF, ticker IWM, continuing to demonstrate strength for small caps as well. Again, small caps is one of those areas that we'll get into more in just a bit here, that we'll continue to see kind of lag behind the large cap space throughout most of this global equity improvement over the course of the past several months, and it's really picked up the pace significantly there over the past week or two, to now have IWM outpacing the broader S&P 500 on a year-to-date performance from a year-to-date performance standpoint there too. And looking at the S&P, we had the S&P coming into last week posting positive returns for 2 weeks in a row, and then movement last week broke that string to have a weekly loss of just under 1% there for the broader S&P 500, with the equal weighted S&P 500 also showing about a 1% loss there. So side by side from a performance standpoint for those areas. But again, kind of like you mentioned there, Jay, not too much kind of surprising movement, just really seeing a continuation of some of those themes that we've been having here throughout most of the last couple of weeks as we move towards the end of the year.
Yeah, and you mentioned, I mean, geez, it's hard to believe that we're now talking about the small cap Russell 2000 ETF outperforming the S&P 500 on a year-to-date basis, and that's not to be said. Not all small cap indexes are showing those good returns, but if you look at the returns, or even from a fund score perspective, if you look at IWM, which is again the Russell 2000 ETF, versus the S&P 500 ETF SPY, we've also now recently seen the fund score for IWM improve to the point that it has now exceeded that of SPY. And that's the first time that has been the case in quite some time, in going back about a year now, that the large cap S&P 500 has seen a score above that of small caps. And it's really more a function of just the improvement that we've seen in small caps, as opposed to deterioration across large caps. I mean, the S&P 500 continues to push to new all-time highs. And so it's not that fund score has deteriorated meaningfully by any means, still above 4, but IWM getting back above 4 and above above that of SPY is certainly something that is very, very notable. Certainly something that is, an area of opportunity to the extent that you might be underweight small caps within an overall portfolio. The small cap positions now are certainly showing scores that they are worthy of consideration in this market environment right now. And really, as we continue to move through this market, equities across the board just continue to gain strength. And as it relates to Dolly specifically, Dolly, we saw U.S. equities move up to #1 back in August, but it has continued to pick up net new buy signals here over the course of the past couple of months, really. And if we look at a snapshot of Dolly there, we see international equities down at #2. And it's been interesting. Obviously, one of the reasons that we have seen the signal count within the equity groups continue to increase is both in U.S. and international equities. We've seen the rally broaden out quite substantially, and that movement that we've seen over the course the past couple of months for small caps is one example of that. Is as those small cap areas began to participate in the market, and for the past couple of months have actually outperformed the market, we've seen the U.S. equity tally rank. So again, that number that you see there on U.S. equities in terms of its signal count of 324 signals, that's accounting for the number of relative strength buy signals that U.S. equities accounts for. And that U.S. equities really is across the board. It's looking at large cap indices, small cap indices, value biased indices, growth indices. And so, as you see that signal count gain, like it has for U.S. as well as international, what it's suggesting is that the rally in those asset classes have broadened out, and to the extent of U.S. broadened out quite substantially across the board there. And so, the strength across those asset classes, the global equity market continues to lead those rankings. Fixed income is sitting there at #3, and even within fixed income, it is certainly the more equity correlated sectors of the bond market that are showing strength, things like convertibles, high yield, as well as even some of the international bond stuff, versus the traditional treasury type of fixed income sectors there. But as the rally in U.S. equities specifically has broadened out, we've seen some notable improvement on some of those style boxes, specifically with in small cap growth now moving up into the #2 position.
Absolutely there, Jay. And like you said, within the one of the different breakdowns that we have for the domestic equities there, again, we have both the domestic equity sector breakdown as well as the size and style breakdown. And seeing this improvement from a performance standpoint of small caps, a continued improvement to now, as we touched on, outpacing that broad large cap representative of the S&P. We see that reflected in some of these individual relative strength breakdowns too, with small cap growth moving up into the second position in the size and style breakdown, overtaking large cap growth. And like you touched on there, taking it back to the score of SPY, we still have large cap growth, in the top end of these relative strength rankings. But just not so much just to say that large cap is, or especially large cap growth, is going to be out of favor. We've just seen kind of more improvement and further outperformance from that small cap space, which has led it up into the top 2 of this size and style breakdown. Also interesting to note is the improvement that we see in some of the unfavored areas in these rankings too, with the small cap value showing a significant improvement in its buy signal tally as well over the past month, moving from a count of only 49 up to 77 buy signals. So still down in the bottom half, sufficiently down in the bottom half of these rankings, as are the other mid cap and large cap value spaces. But definitely interesting to note that improvement for small caps is not something that we're just seeing for the growth side of the things as well, that we're seeing it kind of displayed across the different styles included here also. And another place that we've continued to see improvement or further strengthening of the small cap space is within the asset class group scores page. If you take a look at the macro view of the group scores page, which is that main default view that you come to when you click on the link there on our platform, you see that U.S. small cap is still up in the top end of the broad group rankings, with a recent score posting of average score posting of 4.36, outpacing that large cap and mid cap broad groups which are still scoring highly from a score perspective, and at recent postings of 3.95 and 3.94 respectively. But definitely seeing that kind of further outperformance from small caps reflected in some of the score breakdowns here as well. And looking at the page from a broader perspective, we can see that the U.S. money market percent rank and the U.S. equity core percent rank have actually remained relatively unchanged for actually the past few weeks now, with the U.S. equity core percent rank still maintaining a high position relative to the rest of the groups at a recent score posting of 4.59, putting that percent rank up there at 92%. So staying north of 90% for several weeks now. And the U.S. money market percent rank remains in very low field position relative to the rest of the groups down there at the percentile rank at 2.11. Other kind of interesting moves that we see going on the page are the further improvement from some of the other laggard areas with commodities showing a little bit of the score movement over the past week or so, and also seeing that global and international and diversified group up there with a positive score direction of 1.24, continuing to creep up towards get closer to that 4.0 score line rather. So seeing the improvement as we touched on with from the broader performance standpoint is not something that's just limited to the domestic equity space as well, with some of these other areas around the world with international equities continuing to pick up buy signals in the Dolly tool, continuing to see some score improvement here on the group scores page. Will definitely be some interesting areas to watch as we look towards 2021, Jay.
That's right, and hard to believe that we're getting there pretty quickly, almost halfway now through the month of December. So just a couple weeks left through the end of the year, and typically, as is the case around the holiday season, you tend to see things, especially trading volumes, slow down in the market. Although it'll be interesting to continue to watch that as I'm sure far fewer people and families will be traveling this holiday season. But nonetheless, we'll continue to monitor the situations across all of our different equity indicators, as well as various charts that we talked about today. If you have any questions in the meantime, if there's anything that we can do to help you and your business, please do not hesitate to reach out to us. Our contact information is on the screen right there, phone number and email address. And as always, we appreciate you taking time out of your day to listen to us on these calls. So hope everybody has a great, happy, healthy holiday season, and we look forward to talking to you next week.